Good morning, traders. It's 8:01 a.m. Chicago time. Excuse me. Ooh. On Thursday, the 12th of October, 2023, this is episode number 2556. Dun, 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 dramatic music. US CPI today came out just about a half hour ago. Let's take a look at our pre-market summary sheet from Convergent Trading, convergenttrading.com. Of course, follow on twitter.com/conv trading to get this sheet as it drops. Again, US CPI released, US CPI higher than expected. Let's kind of go through the numbers here a little bit. The key headline number is the core inflation month on month came in at 0.3 in line. Core inflation rate year on year came in line at 4.1, which is lesser than the 4.3% last month. Okay, so the core did not move and is in line. But inflation, the one that everybody reports, inflation month on month ticked up 10 basis points to 0.4% versus 0.3%. So that's what the market's responding to. Inflation rate is at 3.7% versus 3.6%. But the fact is, it really things aren't that terrible, right? So even though the market flushed below, and we'll talk about the SOC for the S&P and so on. Even though the market's flushed down, really, I'm very, very skeptical here. So we'll see what goes on. Before the market today, we had Walgreens. Walgreens came out and reported. Walgreens is quite enormous. It's a big pharmacy here and retail store in the U.S. Came in at 2.9%. It missed by 2.9%. Was expected at 69 cents. Came in at 67 cents. But it beat on revenue, so it made more money, less profit. So I'm sure the stockholders are going to be talking a lot about that. That's a big one this morning. Delta Airlines, the other one, came in at $2.03 versus the $1.94, so it beat by 4.64% on a lot more revenue, 15.488 versus 14.54 billion expected, so it beat at 6.5% on revenue. There are others, but that you can look up after the close today. We don't have anything really significant. So US CPI higher, core in line, initial claims slightly lower, Japanese PPI lower than expected. That's important. And then basically the world is monitoring the situation in the Middle East. US Speaker of the House hasn't been selected. They were supposed to be selected yesterday. And then the Chinese Sovereign Wealth Fund, which is very, very, very well funded, has taken a stake in these China's largest banks. This is a sort of put option that's being introduced to the market, which is very bullish for those banks. So they're all popping higher. And the UAW said that 8,700 of its members at Ford's Kentucky plant joined strike after Ford refused to make further movement in bargaining. What do we have for today? The calendar's really busy. There's a lot going on today. Of course, Fed speakers continue to pour out, but Fed's Logan at 10. We got the crude numbers at 11 because Monday was a holiday. And we also get the gasoline inventories. We get the crop report from Mr. Beeks at 12. And then we have Fed's Bostic at 1. We have Fed's Collins at 4. We have the inflation rate out of China. If you're trading the Asian session, pay attention to that. Inflation rate comes out at 930, PPI at 930 as well, and then imports and exports. Let's look at the S&P. The S&P is in a multi-distribution profile. Very clear, 253,000 contracts, 254,000 contracts traded. And until just after the number here, the market was 100% long. Inventory was 100% long. And the range is 22.75. That's the condition in the S&P. Again, volume quite high with inventory quite long. So let's take a look at what this means. By the way, look at how this PPI traded. PPI's SOC is right here. Right there. It's 44.2775. Keep this number in mind. This is what we call the SOC, the scene of the crime. As I said, the core numbers were not bad. And then since that number dropped, this is all within, a few seconds, 10, 15 seconds. We get a drop, lots of skipping. You could see a huge imbalance on the sell side, somebody sweeping, huge imbalance, more imbalance on the sell side. The market finds stability in this 44.20 area, tries to come back up to the SOC, fails to do so by 2 points, extends lower, and then from there we have a retest of the zipper to the left and then continuation lower, and again retest of VWAP, and right now it's just kind of lingering there. This isn't running directionally. This hasn't done much. We have just basically overlapping bars since the number came out. So if we look at this is RTH only, that's right. If we look at our active chart, here's the number coming out right here, 44.2775, and it falls, pulls back right back to the zipper formed before the number, breaks down, pulls back to this zipper after, and then it's just kind of drifting a little bit. We finally tagged settlement in the overnight session, testing VWAP, and it's looking kind of weak. However, even though it's looking weak right now, the overall imbalance condition for the market is still to the upside. So yesterday we had an inside day, very, very balanced. But look at where we are. We're gapping up today versus yesterday. So yesterday's agreed upon prices, the POC at about 4,400, the VPOC below that at 95, VPOC being in line. There's the VPOC the day before. There's the VPOC yesterday, completely balanced. No migration in the point of control. Point of control up, point of control up, point of control sideways. And we are opening in a gap. So yesterday is really acting as those of you who are looking at price action alone, those traders who are looking at price action alone are just seeing this. What's the thing that comes after we have this pattern? We have a clear impulse up on the daily, and then we have kind of a sideways bar. Imagine somebody trading off of an intraday chart here, 30-minute chart. Let's take a look at that. This is what they're seeing based on yesterday. Having traded that way, what do you expect that this person is likely, a price action trader, is very likely to see this as a flag consolidation. The market didn't really reverse. The expectation is we're likely to continue higher. So the overall market condition is imbalance. Imbalance. The overall market condition is expected to be imbalance. And why? Why is it imbalance? It looked like yesterday was a balanced day. Yes, yesterday was a balanced day, but we have one time framing up, higher lows, higher lows, higher lows. So until the market takes that out, the one time framing up continues. Yes, we had a lower high yesterday, but we didn't breach the low. So yesterday looks to me more like a rest day, absolutely balanced day to day. So today is expected to give us a hint as to will it continue into the gap of 44, 18 and a half and up, which it took out by 2 ticks 2 days ago. Does it continue into the gap to what price? Without looking at your charts, what's the gap fill price? Up above, there's a gap zone in RTH. What's the gap fill price above us? You should know it. It should be in your head. It's like those people who don't want to learn math because they say they always have a calculator. That's true, you have a calculator, but in order to really understand it, you need to be able to compute it. The number I'm looking for is 44, 44, oh man, 44, 46. So the gap zone is 18 and a half, now 19 to 46. So as we kind of teeter at yesterday's high, back and forth, yesterday's high was 10 and a half. We tested the 10 and a half first thing. We pushed the overnight high. I believe it was the overnight high wasn't it 10? I believe the overnight high was 10. And then we kind of squeezed that overnight high and only by a couple ticks and held on. So yesterday it was quite obvious that the market was having a hard time stimulating buyers to discover prices higher. And then today we need to see what it does. If today comes into and stays within yesterday's range, we have a consolidation, and then we're watching for how value compresses. The more value compresses, the more it will explode. The bigger the explosion once it breaks out, and those are big days. Okay, so that's how things are looking. We did rally into the close yesterday. Again, the market condition is imbalanced to the buy side. That's the overall market condition. Yesterday's trade was balanced to the day before, almost to the tick given the points of control. I mean, the market really loved those 43.95s or so, right? Day in, day out, we've kind of traded the same price. And so with that being said, it just appears to be kind of resting in here. But what we're noticing, the thing you should observe as a trader immediately is, hey, it's not letting go of these highs, right? We're not hanging out down here. We're hanging out at the top. And so this is very likely to squeeze to the upside. And once it does, we're back in the gap. And then once we're in the gap, once we get into 44.19, what are we looking for? We're looking for a liquidity check above 19. Okay. Last time it only pushed 2 ticks. That may not be high enough. It did. We did get some big lot trades going off at 18.5, 1875 and 19, and it fell back in. But it also came back. It did that kind of on news. What we want to see today is that it goes up, starts to fill the gap. We want to see really big buy prints as stops and liquidity gets triggered. And then the most important part is, how does it respond? Does it pull back and fall back towards the prior range, or does it have a hard time pulling back and then it continues in that direction? In that case, we're going long, and again, we're going to target the gap fill. So we have a very clear unauctioned area, and then we're looking for a trade between 20 and 46 in that situation. So here's a clear view of it. There it is. There's the prior high, 1850, 19 last time. If we push here and we get some really good lifting, then we're looking for the 46. The 46 was a strong sell-off day. The market ran away from value. Value was established very clearly up here at the naked point of control of 4,500, basically 4,501, and then the market ran away from value and put in a low basically at the 44, 46 essentially. So that becomes a really key area to test. I would not fade this as it pushes into the gap, deep into the gap, not, 2-3 points, but it starts, 5, 10. I would not fade this. So I wouldn't go and, try to sell something in between, gap mid or whatever. This thing has come a long way, and it's got a lot of fuel from all of the trading that has occurred over the last 2 weeks, 3 weeks or so. That's the stance of the S&P. Looking at the overnight stance and how things are shaping up here, the overall picture is the small lots have been long, but if you look at the S&P's been surfing VWAP into the European session. It starts to sell off, and it comes above VWAP, and then it's disrupted, retest, and it's holding steady below the VWAP. So today, with that VWAP being just above at 1950, today, as soon as it starts to push through the 1950 and hold, you're likely to see a short squeeze. Okay, but right now it looks like it's really having a hard time holding on to these higher prices, right? And to me, CPI, yes, we've upticked, but the Treasury market is doing a great job managing expectations in terms of yields. It's been selling off, and now the bonds and the note futures are rising, which means yields are coming down. So this is likely to stimulate the Fed to be hawkish. You're likely to start hearing hawkish commentary constantly. They're going to send everybody out in the field to talk about how the market is not doing what it's supposed to do, and so on and so forth. And this inflation is kind of feeding into that, right? So the market might start pricing more hikes or longer duration of holding rates at higher rates. 525 to 550 goes to 550, holds on, or it might go even higher. You can look at the Fed Watch tool to see what the expectation there is. Let's take a look at what we've got trading wise today. So what am I looking for this morning? This morning, because we had quite a balanced market yesterday, the most important question we have to answer this morning is, do we respond and return into range? If we respond and return into range, so if we poke down, come back up, unable, and then we continue lower, remember we rallied on the close, and we continue lower, then it's a gap to settle trade, and we're looking for a short. We're stalking for a short, looking for prior settlement, which is at 44.09-ish, 44.975, something like that. And we're looking for yesterday's point of control at 96. So we're looking to target, to catch somewhere, a price somewhere in the 06 to 10, 44.10, targeting 95, 96. That'll be the key trade of the day if we fall back into range. And because we're remaining below the VWAP, and because we are above the prior range, and we're doing this overnight, it's, in a multi-distribution profile and so forth. Oh, this dude's got one hanging off the side of his lips. Nice big blunt there. Then, the expectation right now with the mid and everything above us, the fact that we're giving up on this area that we've accepted all night, The expectation is the market's likely to be responsive because yesterday's profile was balanced inside of the prior day. Okay, the imbalance in the market is positive. It's a buying imbalance. It's a bullish imbalance, but it doesn't look like it's ready to go. So that's where that stands. Now, if the market opens, tests lower, takes out the overnight low, and has an impulse higher that gets us through the full session mid, then I'm looking for a pullback into full session mid to target the SOC, which brings the auction back to that 27.75, target the 27.75 SOC right here, puts us in one vol of sigma, 75, and then we're looking for this thing to walk itself up. I'm not saying it'll do it today, but I expect it to walk itself up to 46. The market abhors a vacuum. The market does not like to have a vacuum. When we have an untested range, the market's going to want to fill it. Okay? That's kind of a historical probability. As always, past performance, not indicative, yada, yada. Oh, here's an interesting one for those of you trading the RTY. Look at this RTY. Just selling off on inflation, right? Coming right back to settlement just now, but large lots are buying the heck out of it. Isn't that interesting? There's money coming into the small lots right now. The fact is we trade price, but I just find that there's a very clear large lot divergence here. These two are fighting each other, and you know the large lots, which are, let me see what I have set here for the large lots. I don't have that memorized. I don't trade this product. So large lots are 5 lots to 29 lots. Very large lots are 30 lots or better using MBO data. So these guys are kind of handing off inventory to each other. So intermediate to upper time frame and upper time frame are kind of trading against each other, with the small lots actually controlling the auction right now, controlling how Delta is moving. I find that to be quite interesting because I want to see how it balances on the open and pushes. Let's take a look at crude. Crude, man, crude has been, again, this is not suitable for all investors, but those of you who have been involved in the accelerator program here at Convergent, and those of you who have been listening, we talked about how we gapped up on crude on the Israel-Palestinian conflict, and then the very next day we come and open against value, we test value, and we fall off when we generate overlapping value, but we generate a lower high with a lower low, most importantly a lower high. And then yesterday we opened in a gap, test value, and then I said it's very likely, if you watch the last few videos, I said it's very likely to fill the gap back to 43.28, and yesterday it went to 43.11. Isn't that, this just crude is just like, if you use profiling for crude, it's amazing how well this thing trades, given that it's a fundamental product. Noticing the same thing in gold as well. These fundamental products have been very interesting. Anyway, that's crude. And then NQ, just same old, but the NQ has left this gap that the ES is fighting with in the dust. And NQ, instead of having an inside day that was concentrated against the middle distribution, like we saw in the ES, nope, it decided that, no, we're going to migrate our point of control higher. We're going to put in a higher high, and we are hanging out at the high. So NQ is in a buy imbalance, very clear buy imbalance, whereas the ES is resting. And the NQ is just a lot stronger. I think the NQ right now is tougher to trade. It's tougher for me to read the auction in the NQ presently. Okay, the ES is a little bit easier, and that kind of fluctuates. Okay, I'll leave you with that. You have 4 minutes to the open. Good luck today. And if you have any comments about what you heard or saw today, I'm happy to hear them. You can add them as comments to the video. And don't forget to subscribe to the channel and to hit the like button. Okay, thanks.